What's going on with the Pump.fun ecosystem token? Pump is not pretty at all. We are rather dumping now. The question is, does it make sense to buy this dip now? Is this an opportunity to go against the grain, to be contrarian, to buy when most people don't want to have anything to do with the token? In this video, we are going to look at the drivers of demand and supply, because the intersection of the two obviously determines the price. And the question is always who might potentially sell and potentially buy in the future. Now, this is the current situation. We are at 0.44 cents. And at one point, we were at 0.67 cents. I published a video on the Pump token already 4 days ago, and there was quite a bit of attention, as in the video outperformed the average video, and still there were many people searching for more information around the asset. Now, data like this is always useful because attention can turn into demand down the road. The Pump token has a market cap of 1.5 billion. And what we see over here is an overview of Memecoin tokens. Now, technically, Pump is not a meme coin. It's a launchpad token, but still, it gives us an idea of where within the ecosystem Pump is standing. Now, Bonk is the largest meme token on the Solana chain. It's got 2.6 billion in market cap. And seeing Pump potentially flipping Bonk, that's probably the potential upside. So more than a 2x from here is rather unlikely. And we can see that right now, the token is clearly underperforming the crypto category, right? Everything is green, just the Pump token is red. But that then begs the question, is this potentially an opportunity? Now, the Pump.fun ecosystem as a whole tends to not grow that much anymore. Here's the number of total deployed transactions on Pump.fun. That peaked in January of this year, and since then is on a constant decline. Here's the number of all transactions of Pump.fun over time. This is now monthly, and that peaked in January of this year as well, since then on a decline. As a fraction of all transactions on Solana, Pump.fun also tends to rather shrink right now. Here's the monthly trading volume in US dollars. Again, a peak in January. Since then, the ecosystem isn't that relevant anymore. The monthly trading volume outside of Pump.fun grew, however. So the usage of the platform is definitely struggling, which does make sense, right? It's a player versus player game to trade meme coins. And over time, there are some people that have more information, that have more data. And so the capital concentrates towards those people, and the vast majority of traders tend to lose. The losers tend to exit the system. Thus, if there's no new people coming into the space, the ecosystem as a whole tends to shrink. Now, besides that problem with demand, we also have a long-term problem with the supply. This is the circulating Pump tokens over time. And we are currently at 430 million Pump tokens, but this can grow all the way to 1 trillion tokens. It's not a problem today, but it might become a problem in the future. Because of that, the Pump token had a problem outperforming Solana. So what we see over here is a logarithmic chart, the Pump price relative to the Solana price, not just the US dollar price. We see here relative performance. This fell from the top to today's price by roughly 40%. Here's the number of first-time traders versus recurring traders per day. It seems like every day there is less hype around the token. We can ignore the latest data point because today has just started. But in general, the trend is clear. Most people entered the token on day one, and then less and less people followed. Here's the trading volume over time, a very similar development. Again, most trading volume on day number one, and since then rather declining. Here's the trading volume split up. So over time, it's more and more small retail wallets that interact with the token. The larger wallets tend to not be that active anymore. Now over here, we see the number of small retail investors versus whale investors over time. The way you make this distinction is by looking at minimum holding thresholds. How many Pump tokens are held in a particular wallet? If a wallet holds at least 200,000 Pump tokens, it's counted on the left. So that's now roughly $1,000 worth of the token. In the middle, it's 2 million tokens. So that's now $10,000. On the right, we've got another 10x. So that's now 20 million tokens or $100,000 worth of the token. We can see how the whales tend to rather sell off. We see how small retail bought in the first days, but also stopped buying in the last 4 days. So really, the excitement is slowing down, and that obviously contributes to the underperformance as well. I do not think though that short-term Pump has to drop from here. Long-term, of course, it does look problematic if the platform doesn't get more usage and if the tokenomics stay the way they are. But short-term, there might be more accumulation by the centralized exchanges and by the market makers, and they might increase the volatility artificially to generate more attention again and generate some trading fees in the process. Have a look at the spot trading volume. Most of it doesn't happen on chain anymore. Very different to the video published 4 days ago. Most spot trading volume now happens on Bybit and Gate.io. But it's only 160 million worth of trading volume in the last 24 hours. Compare this with the perpetual futures market. Here we have more than 400 million. Now again, 4 days ago, there was no OKX and no Bybit perpetual futures. There was no way to get into leverage on the Pump token with those exchanges. There was only hyperliquid. This has changed because some market makers already purchased some of those tokens for hedging. I do believe that in the future we will see more centralized exchanges getting in. Binance, for example. Most traders that bet with leverage on the Pump price bet on rising prices. So the longs have to pay the shorts in order to get more price exposure. Hyperliquid saw massive adoption, and that's when the open interest went up. But now it seems like with the decline in the interest in the token, despite all the adoption by the centralized exchanges, the open interest is falling again. This is also bad for the spot price. There is correlation between the amount of speculation on an asset and the spot price. The more open interest we see, the higher a price can go. And seeing the open interest falling is not good for spot. Because of the negative price action and because the majority of people are betting on rising prices, it's mainly the longs that currently get liquidated. But if the market balances out a bit more, and if there's not so much long exposure anymore, and the centralized exchanges accumulate more of the token, the price can stabilize. And we might see a complete surprise short squeeze if some people start betting on falling prices. I don't think because of the tokenomics, because of the expanding supply, that the Pump token is a good long-term investment. Is it good to bet on rising or falling prices in the short term? Potentially, but volatility can increase as the centralized exchanges and the market makers buy up more and more of the supply. My plan with the Pump token is to stay away for now and wait for the first short squeeze, to wait for the price to suddenly spike up without any kind of news. Suddenly we might see a price rally of 20-30% at some point. Once we are there, once the price inflates quickly and everybody looks at the Pump token, that's when I will bet on falling prices, because that will be short-term manipulation just to generate trading fees, just to generate liquidation fees. And usually those quick squeezes, they then deflate at some point when attention doesn't follow to the same degree. The general problem with crypto as a whole is that there's more and more token emissions. So a lot of projects launch and the founders want to pay themselves. The early investors, the venture capitalists want to pay themselves. Maybe there was also some marketing expenses. So some YouTubers might get an allocation and then sell the token. And the retail investors have to support all of that selling for the prices to stay stable. This here is the weekly token emissions of the entire altcoin market that's tracked on this website, Tokenomics.ai, and it's pretty much above 600 or at least $500 million every single week. If the inflows into crypto are slower than that, then the altcoins have to go down, at least relatively speaking. For example, have a look at this here. This is the DeFi protocol 1inch. So it's a decentralized exchange aggregator. It got a lot of usage in the past. But the problem is that the circulating supply grew massively as well, right? From 100 million to now 1.4 billion. And that then leads to 1inch doing much worse than Bitcoin or Ethereum. This is 1inch relative to Ethereum. Have a look at this. This is Optimism, right? A leading layer 2 scaling solution on top of Ethereum. It started out with 214 million tokens and it's now at 1.6 billion tokens. And that's the long-term chart relative to Ethereum. And so there are several consequences from this, right? We cannot afford to own a lot of different altcoins because the vast majority of altcoins underperforms Bitcoin and Ethereum most of the time because of that token inflation. But also picking a single winner here and there is very hard because, again, most tokens do worse. So it's like picking the needle in a haystack. Some people simply just stick with Bitcoin, Ethereum and Solana then and forget the rest of the altcoin market. But I actually think there's an opportunity here because if we have constant underperformance, we can bet on that. We can bet on the underperformance to continue and make money from that. So instead of getting this performance by buying 1 inch, we flip this around. We bet on falling prices of 1 inch and bet on rising prices of Ethereum at the same time. So this is the same chart, just flipped. And this is simply using decentralized finance to do exactly that setup. We are betting on Ethereum to outperform 1 inch. Same here for optimism, right? Instead of buying optimism, we are just betting on falling prices of optimism relative to Ethereum. So in the last year, that position performed 150% roughly. Now try to make 150% in a year just by plain simply buying an altcoin. It's much easier said than done. Yes, there are some outliers. There is this Aerobot and this DRGN and this SNSY token, but the vast majority of altcoins is just going down. And so instead of trying to find the next Aerobot, I think it's better to just flip this around and everything that's red becomes green and everything that's green becomes red. So then we've got the odds in our favor. We don't try to pick the needle in the haystack. Instead, we bet on the haystack, on the vast majority, to do poorly. And again, there is a fundamental reason for that underperformance, right? It's all of those insiders selling all the time. The venture capitalists, the team, etc. Maybe even the users of the platform that get incentivized in tokens to use the platform. Have a look at the altcoin market cap relative to Bitcoin in the last 3.5 years. It underperformed by 75%. And if you flip that around, we've got an outperformance of almost 300%. So this is now Bitcoin divided by the altcoin market cap. I'm following this strategy already for quite a while. What we see over here is my portfolio performance in the last 4 years roughly relative to had I just dollar cost average into Bitcoin. So the Bitcoin dollar cost averaging is in gray and my portfolio line is that one in black. This is monthly data out of my personal Excel sheet. We're now at month 44. I did this mainly with borrowing and lending platforms like Aave and Venus Finance, but recently I changed to perpetual futures and this is even more productive. I started the test 2.5 months ago with 40K and that turned into 60K, again, just in 2.5 months. And so the premium members of this channel asked me, is there maybe a way we can just provide some capital to you and you do those relative valuation trades for us? And so I opened just that. It started 6 days ago, so there's no real sample size yet, but so far it has made 3.5%. I'm happy if we do 10% per month. I don't think we'll make 50% in 2.5 months again. But in general, we are moving in the right direction. And again, it makes a lot of sense, right? Most altcoins do worse than Bitcoin or Ethereum. We don't really have to be that scientific about it. If you want to learn how to become a winner in crypto and how to set up those relative valuation trades, where then the VCs and the insiders don't dump on you, but you're actually making money when they are dumping, then feel free to check out all of those tutorial videos, right? There's more than 100 tutorial videos in premium. I'm of course sharing my own trades as well, and then you can simply copy trade and take advantage of those trades as well. There are many opportunities out there, so feel free to check out the community as well. And so if you're an active trader, you can simply sign up for the monthly membership. It's $125 per month. You can watch all the tutorials, you can copy trade me as well. And once you're joining, I will also share my favorite trade. And if that favorite trade doesn't make you money in the first month, I will refund you 100% of that membership fee. So really, you don't really have a risk of joining here. You're either making your money back or it's for free for you. If you are not an active trader though, and you simply just want to allocate capital, you've got more capital than time, then you can sign up for the annual membership. Here you also get 2 months for free, so $250. And with the annual membership, you also get access to the automated copy trading feature, where you can simply just send money to Hyperliquid. So that's the platform that I'm using. And you get the exact same trading performance that I'm getting as well. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.